So today we're looking at the Elder algorithm and how we implement it into our trading strategy we use on a daily basis. We start by analyzing the 4-hour chart. On screen here we have an 8 and a 21 exponential moving average, as well as the stochastic oscillator. As you can see here, all this area is a downtrend as the 8 is below the 21. Then we move into an uptrend on around about the 23rd of March. And then most recently on the 15th of April, we moved into a downtrend again. If we just drop down to the 15-minute chart, where are we? This is the 24th of March, so we are currently in an uptrend. In an uptrend, we only want to be taking buys, and in a downtrend, we only want to be taking sells. So as we can see, we have our first signal here. We wouldn't be taking this one because we are currently in an uptrend. So we move on to the next signal. As you can see here, we have a little cluster of signals. If we were to take this position, we would wait till the stochastic oscillator passes just above the 20, or at least starts to slope upwards, which indicates a reversal. So if we were to enter here, we would set our stop loss just below this pivot point at 140 pips, and we would look to take somewhere around 200 pips. We move on to the next position. If we were to enter here, we would wait for this stochastic oscillator to go back above 20, or at least start to slope upwards once again. We would enter somewhere around here, probably the closing of this bar. We would set our stop loss to the previous low or this pivot point, and we would target these highs up here. So this is around 100 pip stop loss and 130 pip take profit. As long as it's above a 1-to-1 risk reward ratio, we would take the position. And as you can see, this position will turn out to be a winner, as well as the next one here, which is a very similar position. Moving on to the next one, we have another buy position here. We would likely set this stop loss at this previous low, and we would take profit somewhere at these highs or at this resistance level. As you can see, another winner. Moving on to the next one. This is a very nice one as it lines up perfectly with one of the support levels. If we were to enter this position, we would wait for the stochastic oscillator to start coming up once again. We would enter somewhere around here as it starts to come up. So that's there. If we were to enter this position, we would look to set our stop loss somewhere around here or at this pivot point. This would be slightly riskier, but it would give us a better risk to reward ratio. If we were to set our stop loss at somewhere around here, that's a 115 pip take profit, and we're only risking somewhere around 30-35 pips. That's really good risk to reward. Moving on to our next position. We have yet another buy here. We set our stop loss down here at somewhere around 60 pips, and we would look to take profit somewhere around these highs here, or maybe even this point here. That's 100 pips. It just about hits that. We would be lucky. Or if we were to get out here, this is somewhere around 80 pips, which is still more than 60, so we would take this position. We have another buy position here. We would enter this position. We would set our stop loss somewhere below there for about 55 pips and look to take profit somewhere around here for about 70-75 pips. We may have got out here, and if not, we would have gotten out over there, and it would have taken out just above this resistance point, and we would have held that one overnight. Moving on to the next ones. We have a sell position here. We wouldn't recommend taking this as we are still in an uptrend, but if you were to take this position, you would be setting your stop loss somewhere up there at the resistance level, and you would be waiting for the stochastic oscillator to start to come back down, or you would wait for it to pass over this level here. So you might enter at the close of this bar here, and you would set your stop loss at 55 pips, and you would look to take profit somewhere around here for 100 pips, which would be taken out here. If you were to enter this next buy position, you'd have set your stop loss, at the previous low, somewhere around here, and you would have been taken out by this spike. You can't win them all, so we just move on to the next position, but this would have been a winner, very good position, as we're still in the buyer's market. We have another buy position here. Again, we wait for the stochastic oscillator to start to come up. We would enter somewhere around here at the green bar. We would set our stop loss to somewhere around these lows at around 45 pips. If you want to be very conservative, you would set it at these lows here, maybe 70 pip stop loss, and you would look to take profit 100 pips at the highs. You'd be taken out up here, and if you set your take profit to the resistance level, you would come out with 120 pips. Moving on to the next position. There's another buy again. We're in the buyer's market. We would set our stop loss somewhere below this pivot point, 15 pips. That's a little bit risky, so you might want to be a little bit more conservative and set it maybe at 20, 30 pips, and you look to take profit somewhere around the highs, which lines up very nicely with this resistance level at 66 pips. We have a couple of buy positions here. We'd obviously be taken out. This isn't a winning position. We would lose here, depending if you set it at the previous low or if you set it down here, you would lose 22, maybe 50 pips on this position. Here we have a sell again. This is a buyer's market, so we don't really want to be selling, but if you were to take this position, you would wait for the stochastic oscillator to start to come down. If you entered somewhere around here, after this signal, so it would be somewhere around there that you enter here, you set your stop loss at the resistance level 35 pips, and you aim to take profit down here for 57 pips, which will be taken out here. As you can see here, the date is 15th, and we've just gone into a seller's market, so we wouldn't want to be taking these buy positions here. Again, this is another buy signal. We don't really want to be taking this signal as we're in a seller's market, but if you were to take this position, you'd set your stop loss to below this support, and this one would have been a winner. But again, we do not recommend selling in a buyer's market. We don't recommend buying in a seller's market. So as you can see, we have some signals down here, but if we look at the stochastic oscillator, it hadn't started to fall down yet, and it hadn't crossed this level here. As we get the signals up here, you can see it crosses down there, which would be somewhere around these close here. We would set our stop loss somewhere around this level here for 50 pip stop loss, and we would look to take profit somewhere around these lows, or you would take profit at this support level. If you'd have set it to here, you would have been out already at 75 pips, and if you would have set it down here, you would still be holding out. These are just a few examples of positions that you can expect from the Elgar algorithm. So it's a two-part algorithm that shows you both the turning points in the market with these arrows, as well as these support and resistance lines, which are perfect for setting stop loss and take profits.